Something big is brewing. The charts are flashing warnings we haven't seen since the last major crash. Smart money is moving, and if you're not watching these critical levels right now, you might be walking straight into a trap. This could be your last warning before the next market shakeout. Bitcoin is teetering around the $100,000 mark, and Ethereum just pulled back from $2,250 after a sharp flash crash. If you're not keeping an eye on these levels right now, you could miss the next major move, whether it's a breakout or a collapse. Bitcoin briefly dropped below $99,000 over the weekend, reaching a low near $98,000 amid escalating geopolitical tensions in the Middle East. It has since bounced back to the low $101,000. The primary support level to monitor is the psychological $100,000. A breakdown below this could lead to further pressure toward the $98,000, $97,100 range, which lines up with the 200-day moving average and recent lows. If that area fails, a decline toward $92,000 becomes possible. On the upside, immediate resistance lies between $102,700 and $103,000. Where the descending trend line and moving averages converge. Above that, $105,000, $106,000 stands out as the next barrier. A sustained break above $107,000 could unlock a move toward the $112,000 all-time high range. Summary: hold above $100,000 and reclaim $103,000 to remain in bullish territory. A breakdown below $98,000 would signal a deeper correction. Ethereum experienced a sharp drop to $2,024 in a flash crash on June 21st before rebounding to around $2,247, staying within the $2,205 to $2,290 support range. The key support cluster is $2,250, $2,290s. If this area holds, it could form a base for a bounce. Breaking below 2,021 raises the risk of a move toward 2,000. Resistance zones include 2,097 to 23, where the bounce paused, and then a broader resistance band at $2,380, 2,420, where the 100 and 200-day EMAs are located. A breakout above 2,195 could propel price toward $1,000. Summary: holding above $2,050 maintains the bullish structure. Failure below $200 undermines it, leaving $2,000 next on the downside. Geopolitical events, particularly the U.S.-Iran tensions, triggered the recent dip in BTC, leading to over $1 billion in liquidations across crypto markets. Bitcoin continues to trade within a descending channel following a strong April-May rally. Ethereum has formed an ascending channel after the flash crash, indicating potential stabilization. On-chain data shows funding rates turning bearish to neutral, signaling cautious sentiment among leveraged traders. At the same time, wallet addresses holding one or more BTC are increasing, pointing to accumulation by long-term holders. Set alerts around $100,000 for Bitcoin and $2,250 for Ethereum. These are key decision points. Use tight stop losses just below these critical supports. Consider small buys on confirmed bounces rather than chasing green candles. Stay alert to news related to global geopolitics and macroeconomic signals, which can trigger sudden volatility. How to prepare for a potential drop. If the 100K level for BTC and the $2,250 zone for ETH fail, here's how to manage risk. Staggered entry zones. Bitcoin bust-through of 98K could find further support around 92K, where multiple historical lows converge. Ethereum breaking below $2,200 may test $2,000. Position size accordingly and avoid stacking too much in a single price bucket. Stop-loss placement. For long positions, set stop-loss orders just below 98K for BTC and $2,200 for ETH to lock in manageable risk. For short positions, Consider stops above $103K for BTC and $2,380 for ETH to avoid blowouts if recovery occurs. Position sizing and leverage. Markets remain volatile. If using leverage, keep it under 2x and reduce exposure near key levels. For spot trading, consider scaling in with smaller buys every few $100 drop rather than all-in entries. Indicators of the market bottom. Watch for these signals to indicate a potential rebound. Oversold RSI extremes. BTC's RSI recently hit A25. Historically a sign of deep oversold conditions and potential bounce areas. ETH could follow suit if RSI dips below 30 and stabilizes. Volume spikes and absorption. Sharp price drops accompanied by high volume followed by range-bound price movement, signal institutional accumulation. ETH whales have already added over 116,000 ETH, 265M on during the June 21st dip, showing strong buy-the-dip behavior. Funding rates and open interest trend changes. Worsening funding rates often signal peak trader stress. A sudden return to neutral or positive could mark a shift. ETH open interest has declined after large liquidations, suggesting an unwind is possible. Big wallet movements and exchange flows. Watch on-chain data. When whale wallets withdraw large balances to cold storage or DeFi protocols, it often precedes price bottoms. ETH is seeing record whale accumulation, nearly 1 million ETH taken off exchange wallets in a day. What whales are doing now? Institutional players are making big moves. Ethereum accumulation. Whales purchased 116,893 ETH, 265 Us, on June 21st, followed by additional $263 of purchases through June 22nd. Large wallets, 10K plus ETH, have added position even during market dips, suggesting confidence in ETH's trajectory. Bitcoin positioning. Despite short-term volatility, institutions continue adding. U.S. firms like MicroStrategy recently bought, and ETFs keep inflows high. Geopolitical turmoil may drive short-term dips, but historically BTC has rallied post-shock. How to trade the next move? Here's a framework. If support holds, 100K BTC, $250 ETH. Open small, long positions. Use tight stops below support and ride any relief rally toward 105K BTC or $2,380 to $2,120 ETH zone. Consider scaling out into resistance or around known ETF-driven flows. If support breaks, wait for stabilization near 92K BTC or 2,000 ETH. Watch volume and whale buys. Enter only if you see clear bottom signals like RSI turn, whale inflows, or funding normalization. Watch the macro picture. Sudden strength in the dollar index, DXY, tech sell-offs, or fresh geopolitical headlines can trigger swift downside. Conversely, dovish Fed tone or inflation surprises could flip sentiment fast. Align entries with those broader trends. Signs to look for a turnaround. BTC RSI recovery above 30.35 after reaching extreme levels. ETH RSI holding above the mid-30s, especially during whale buying phases. Funding rate SALM stabilizes or turns positive across major exchanges. Major whale wallet accumulation slows price decline, visible with on-chain tools. Macro sentiment shifts, dollar weakening, equities settling, or news de-escalation. Final recommendations. Stay alert and flexible. Use alerts on key levels and monitor on-chain dashboards. Favor tiered entries and strict risk management rather than bold bets. Focus on behavior, not narrative. Watch price action, volume, on-chain moves, not Twitter headlines. Be patient. True bottoms take time to form. Whale accumulation often outpaces retail, which may misinterpret dips as panic. When price aligns with institutional buys or starts stabilizing with improved funding/signals, that may be the point to build a position for the next leg higher. And finally, I want to say, if 100K holds for Bitcoin and $2,250 for Ethereum, we may see a sharp rebound toward resistance zones. If they fail, deeper support levels await, but entry should be cautious and signal-driven. Whales are already in accumulation mode. Follow their lead and trade with discipline. Stay tuned for the full breakdown with entry templates, risk-reward setups, and how to track whale wallets in real time. Let me know if you'd like that next.